Thank you for joining us at XM.com. This is the weekly outlook. Euro and dollar traders will have a lot to anticipate as the upcoming week holds the ECB meeting as well as the all-important US CPI report for February. I'm Cristina Marujos. With me today is our lead investment analyst, Rafi Boyajian. Rafi, starting with the United States, the latest economic data have been coming in rather strong, forcing investors to revise the Fed terminal rate much higher. But what are we likely to see in the CPI data this week? And could the report solidify whether we see a 25 or 50 basis points at the next Fed meeting coming up in March?
Well, Christina, that is the big question. Obviously, a lot of anticipation for this CPI print because it will be the last one before the March policy meeting. And last time, of course, we had that upside surprise where we basically, we had a number of months where we saw good progress in terms of getting inflation down. And then we started to see a bit of a slowdown in the pace of the decline in the inflation rate. And it may also be another slow month for February because we are expecting month-on-month increases in both the headline and the core rate of the consumer price index of 0.4%, which is still a somewhat elevated pace. And then the year-on-year, we could see decline only marginally from 6.4 to around 6.2 or 6.1%, around about there. So basically, it's the story that inflation is proving to be stickier than anticipated, and the Fed seems to be having second thoughts about having downshifted to 25 basis points at its February meeting, and there is speculation about whether or not they will return back to double rate hikes. But of course, we're going to get some other data next week as well. We've got the producer prices on Wednesday and then the retail sales numbers as well. And that could be significant too, because we did see a slowdown towards the end of 2022 in consumption. Then we saw this big rebound in January. So are we going to get more of the same in February? Probably retail sales will have moderated in February, so that could, maybe ease concerns about an overheating economy. But Powell has opened the door to 50 basis points. So obviously, should we see a big positive surprise in the CPI, positive as in hotter than expected CPI report, that could definitely boost the US dollar further, boost yields much higher, and that would be negative for overall risk appetite as well. On the other hand, should we get any surprise misses in the data, any surprise softness, particularly in some of the components of the CPI, we could see the opposite reaction in the markets.
Now let's turn to Europe. ECB President Christine Lagarde has been loud and clear in her message that a 50 basis points hike will be delivered at the March meeting coming up this week. So investors will likely focus on the bank's future projections. But what could that mean for the euro?
Well, as you said, we know pretty certain that it seems to be a done deal that we're going to get a 50 basis point rate hike at the March meeting. And we've had some mixed signals as to what's going to come after that. There's actually quite a few ECB officials that do support raising rates by 50 basis points through the summer. But then on the other hand, we've got some dovish members, particularly the Italian central bank governor, who recently actually criticized his colleagues for so openly, so strongly backing several more 50 basis point rate increases. So Lagarde will probably have to find some kind of a middle ground. So perhaps what we might see is that the ECB will clearly indicate that more rate hikes are on the way, but not commit itself to more 50 basis point ones. They might say whether or not we go for 25 or 50 will depend on the data. But even on that front, if we have a look at underlying inflation in the euro area, that's at 7.4%. That is really quite high. So it's going to be interesting to see whether or not they're going to pledge another 50 basis point rate increase. And of course, in their projections, the other important thing to watch will be how soon are they going to forecast inflation to fall back towards 2%. So that could also be a signal as to the pace of future tightening.
And crossing into the United Kingdom, the spring budget is to be announced on Wednesday. Evidently, markets are much calmer compared to the last time we had a budget announcement. How is the pound likely to perform?
Well, that is right. Of course, we had a very turbulent budget at the last time. This time around, I think markets do feel that we've got a safer pair of hands running the UK's finances. So the thing with the UK is that the economy isn't doing as badly as feared. In fact, on a comparative basis, you could argue that it's only marginally doing worse, if at all worse, than, say, Euro area and somewhat worse than the US economy. So things aren't that bad, but the outlook isn't that great either. Now, one of the bright spots throughout this uncertain time has been the labor market. We've got the employment numbers coming up on Tuesday. So investors will be watching, the pace of wage growth because the Bank of England is watching that very closely as it decides whether or not more rate increases are needed. But in terms of headlines, possibly the budget will steal the spotlight. Chancellor Jeremy Hunt is under pressure to do something to boost the economy, but he's got, of course, limited scope to do this, given the high borrowing the UK is seeing at the moment because of not just the weak economy, but also the support the government is giving to help households with high energy bills. So Hunt may announce some kind of tax breaks for businesses to encourage investment, and that would be, of course, a policy that would boost growth. And the other question is whether or not are we going to see an extension of the subsidies for households and businesses in terms of the subsidizing the electricity bills. Probably we will get an extension of this. The price guarantee that was introduced last year. The question is it going to be as generous? Are they going to maintain the current generous support, or is it going to be scaled back a little bit overall? And as far as the pound is concerned, we're probably not going to see a huge reaction from the budget. But if it's a broadly pro-growth budget and the government is maintaining its fiscal discipline, then that could be overall supportive of sterling going forward.
Rafi, thank you so much for joining me today. This was a weekly outlook here at XM.com.